Well, hello again, traders. For those who have been with me since the morning sessions on Wednesdays at the market with George, trust we've been having, I know we've been having a lot of fun with the insights into price action trading. Had a quick look at my trading history. It was a decent enough morning, we're up 1% with profits. 3 trades that we're in, and we'll chat about where we are with those as we progress. So we are carrying on, but one of the things that we spoke about earlier on, which is pretty important, is you can't trade on a lower time frame, which is our 5-minute time frame. You can't trade all 8 markets that are heavy at the same time. So you need to have a selection criteria which enables you to zoom in and focus on a few markets. So the markets that we had eyed was the German 30, S&P 500, Hang Seng 50, Aussie 200. We didn't have the UK 100 on our list, but there's some things there that I think are worthy of us to have a look at. But before we do that, let's just have a look at the markets that we were looking at and see if anything else is setting up for us. So German 30, we didn't take any trades here. So where we presently are, this yellow block here is just call it the magnetic range. Fancy terms, make price action more interesting. Could I make them up as you go along? So you probably won't hear many other traders talking about it. The magnetic range of the first candle of the day, always important. Measure move up, measure move down. And that's kind of controlled the market. So if you pull that right across, so there's the first candle, measure move up, measure move down. If you pull that right across, you can see, okay, I'm going to put them up and take them off in case you're not in the market. So there's the first candle of the day, very important. Let's open up a little bit. Now let's do this. First candle of the day, the high, the low, measured move up, measured move down. Okay, so that's where we're at. Just take them off to avoid the clutter. Okay, so you can see we are within that control. We tried to break out beneath it, failed, tried to break out above that measured move and failed. So we are within this zone. Now, this is the middle of a trading range as well. You don't want to initiate any trades here, but you got to be thinking to yourself and say, I want to take the trade, but where do I take the trade? So the little trading range is forming here. If we break out above that trading range, so the measured move of that trading range will be up here. And if the bears get there, the bulls get there, they would have achieved their objective by breaking out of this trading range. And if we then have the bears coming in at this level, which is the present high of the day, and creating for us a reversal, then we'll have a double top. Okay, then we just have to look for a lower high. So that would be a nice area to start looking for ways to get into the market. But what if the bears are strong enough to break beneath this pattern? The objective is always a measured move. You can always jump into trades. I keep saying that any time. But where do you put your stop? That's going to be the question. You can't just put your stop and get stopped out, by any little move. If you take any trade here, you still have to put the measured moves. If you are selling, your stop has to be above the high of the day. And you're assuming that you get a breakout and you get your one-to-one down here. If you just want to buy, for any reason, your stop has to be below the measured move or the low of the day. So obviously it makes more profitable sense to wait for the market to get there and see if you get a breakout or a reversal. So nothing on German 50. We had a trade we took earlier on the S&P 500. It was here. Took the trade and we got out small profit, I think above this candle. Okay, so now we are at a level which we marked earlier on. This gold little rectangle is just showing us the interest in price action that took at the midpoint of yesterday. So this dotted black line here is the 50% midpoint of range of yesterday. You mark the high, the low, 50% of it. But at the point where the 50% yesterday's US session with a gap down, bears gap down, strong bear breakout and follow through leg one, leg two to the end of the day, then a slight pullback that created the tail on the day. So the market coming into that level, this is the present high of the day, the blue line just here. And I just inserted that gold rectangle as a reminder that this is a key level that the bears want to defend because they gap down yesterday. It's the 50% midpoint of yesterday's range. So they always want to stay beneath that so they control today. Okay, so they have another bear day coming from yesterday and possibly go all the way down here. As long as they stay beneath the midpoint of yesterday, the bears are happy. So very key level of resistance. Bulls, of course, want to break out above that. Okay, so magnetic range of the open of the candle, try to break below it. And the bulls want to break out above that. And of course, the bulls are looking at all of this and say, hang on, we are pretty close. All we need is to accelerate above this little pullback and get above here and close above here. Then we control the day. So if the bulls do that and we see a big bull candle, or a bull candle, doesn't have to be big, it could be any candle that breaks above here and closes on the near side and they follow through. Then most breakouts will have an attempt to fail, which is a pullback. We can jump into that and put our stop here. But the bears are out en masse to defend this particular level. So can't ignore that. Even if you get a breakout candle, want to see if it's a confirmed breakout. In other words, it's follow through. If not, and the market starts to turn, good news for the bears, then we know we just need to find a lower high. So we are in a trading range. Market is forming a double top. We want to see an attempt to break above this and confirmation that the bears are strong. What I should have shown you on the DAX theory. I'll remove this. Go into the daily. Okay, this one bar trading range, one bar doji, absolutely key in terms of one of the strategies that I trade. Because whenever I see a one bar doji, you know that something good is going to happen. May happen today, may happen tomorrow, Thursday, Friday, but it's going to happen. Reason is, one bar doji, you cannot ignore it. Doesn't matter what strategy you trade, guys. You have to see these things and use it within your strategy. One bar doji is a trading range. Whenever there's a one bar doji, 75, 80, 90% of the time, there will be an attempt to break beneath it, get to a measured move, or an attempt to break above it, get to a measured move. That attempt may fail. So there is a one bar doji, failed breakout, try to get above it, failed, opportunities for you to jump in and trade. So that's pretty good news. Today so far is a perfect doji, but we still have a lot of time to go. If we end up with a doji trading range inside another doji trading range, it is breakout mode, BOM. The market will break out at some point. Okay, because market will not continually put inside until we have a straight line. So good for us to keep our eyes on that. And as we start to track towards the US session, I'm more interested in the extreme, if the market gets to the extreme or not, because I don't want to be caught acceleration out of here, and then there's reversals and end up with a dodgy candle for the day. Jumped around a little bit, my apologies, but S&P 500 on the daily, put it up on our charts as something looking for today, looking to see if the bears will close beneath the 10 EMA, 20 EMA, will have strength to break beneath this candle and maybe go and test that low. We are aware of the small tails, but the body is pretty strong, so the bears are strong. So that's why that is on our market, on our list of trading pairs for today, and we are looking to sell. Okay, so what happens if we don't get the test of this level and the bears just start to accelerate down? Well, it's still a trading range. Okay, if you look at enough charts, you'll see how these form. So the measured move of that is to get down to here, which is fantastic. Let the bears get down to here. When they get to that level, which is also a high low double bottom, the bears have achieved their objective, and the bulls are saying, double bottom, let's try and accelerate this, which for us would be fantastic if we got the bears, or if you're looking to sell. Bear candle closing on or near its low. We don't want tails, we want a follow through. Then we'll just be looking for a lower high anywhere within here for us to take a trade, and our stop will be at a measured move above there. So either we get that or we get that, but if we get the setup, stop above there, and we take the trade. I'll come back to UK 100. Let's have a look at the other market that we looked at. This worked out quite well. Took a trade here. And we said another option, we're going to take a trade here, another trade here, and we exited here. We spoke about the bulls needing to put a close above the 10 EMA, which they did, and the 20 EMA. So bulls in a strong bear trend so far, strong enough to put a candle, two candles, one above 10 moving average, which we use to indicate the strength of the market, and the other one above the 20 EMA. Fantastic. So bulls are strong. Now we waited to see if we get a double bottom, which we got. Decent enough, nice enough, very good double bottom. Failed breakout beneath the low of yesterday, failed breakout. So double bottom. So all we would like to see, if you're going to trade this long, is for the market to come back and the bulls to give us a reversal of some form. So in other words, a higher low, which would show us that bears tried once, they tried again, they failed, and if we get another reversal here, the third time the bears would have tried to break beneath the low of yesterday. And at that third attempt, we get a decent enough reversal. The forces, wedge forces, three push forces, 1, 2, 3, strong enough for the bulls for us to look to go long back into the trading range, see if we can get up there somewhere. then all we got to decide is where to put our stop. Okay, if we take in that trade, a reversal trade, your stop is going to be somewhere within here. And this is an extension of this first leg 1, pull back leg 2. Okay, so the bears would have wanted to get there. Then the breakout by the bears is breakout here. That's where they would have wanted to go. We also have the present low of today. Now the bears failed to break out beneath this, so don't worry about the trading range. But if the market comes down here to give us higher low, the bears will be saying, well, you know, if we're strong enough, we can smash through here. That's where the bears would like to go. So there's a cluster of support here. So if you take in any reversal trade up here, you put your stop somewhere within here. Then if the market breaks out into a bull trend with a pullback and you get another setup, of course, you can now have a tighter stop. Okay, so look on the daily, Banks and 50. Again, that 1 bar doji, very, very important. Any attempt to break beneath that, if the bears are strong enough, they want to get to the measured move, which we put here. But because it's a trading range, most breakouts out of trading range fail. So it could fail where it's failed today, or the bears return might get that far and fail. If we get to the top, again, measured move of that is up here. Bulls would like to get above that, but that magnetic force of that trading range is going to pull the market back. But if the bulls break above that, they got the 10 EMA to contend with at the measured move. They have the formation of a channel. So any breakout above that is likely to fail. So either you look for the entries here, or you just come back end of the day and see how far we've gone. Okay, the other market that we had was Aussie 200, but we are in a convergent triangle. Convergent triangle is breakout mode, which simply means that the market is not going to go sideways forever and ever. So at some point, there will be a breakout. So when the 5 minutes didn't get any opportunities to jump in earlier on, and who knows if we get an opportunity now or maybe at the open of the US session, we can look to trade. Right now, we are in the middle of a forming trading range, nothing for us to do here. Gotta wait to see if we get a breakout to get here. Okay, eyeball it, or you can measure it somewhere within here. If we got a double top, lower high, we can sell. Or if the bears start to accelerate, you gotta see if they can break beneath the measured move. The strength. Break out, that's their goal, pull back, and you can hopefully see how far we go. So this we will keep on a watch list. If nothing happens today, just do that on that candle, which is fantastic. This must still stay on the watch list, because this convergent triangle is a powerful breakout mode. Some point they're going to attempt to break out above it, and we'll come back to the apex and see what happens there. We break out beneath it, we can trade that, come back to the apex, and the market decide whether to go up or down. So that's breakout mode. How far would the bears want to go? Down here. So this yellow line, I'm trying to use gold now, it's easier to see. It's just a cluster of levels of support that are here. bear breakout up to that point. There is a measured move up to that point because this candle here just pipped over the high of that. So that's where the pullback actually took place. So when I look at the original breakout up to the pullback, and there's an objective there, you can also look at the triangle, height of the triangle. There's a measured move there. You could also actually put the leg 1 equals leg 2. There is the first leg of the move. Up to there. That's actually the pullback. So it's all within that particular zone. So when you have a confluence of factors like this, that's really a magnet that's going to look to pull the market down. So there's still a lot more that the bears want to do. So it's a breakout. It's really just a pullback that they've created all this converging triangle. So we break out beneath it, pull back to test that breakout and continue to accelerate, which for us, of course, on the 5-minute means every day we must keep looking to see if we get the opportunity to get that trade when we break out. So we can start selling, wait for the pullback, keep selling. We did not have deliberately in the 4 markets we're looking at UK 100 earlier on. But what we said, which is worthy of repeating once again, is that we had this gold level of resistance already drawn in and this gold level of support already drawn in. Reason I had that there is that we had this breakout, market came back, turned at that level. Then we've had trading range price action, 1, 2, 3, today's like the 4th day. And the market is turning here. So the bulls are failing to break out above that. The bears are defending at that level quite strongly. And again, this market is creating a convergent triangle, which is breakout mode, which means the market, there's a very high probability that we are going to see a breakout of this convergent triangle. But then there is something else. It's not just the convergent triangle, there's also this tight trading range here. Overlapping candles, big tails, it's a trading range. And the market will try and break out of a trading range, but because of the trading range itself, any first attempt to break above is likely to fail. Any attempt to break beneath will likely to fail, and the market will pull back to exactly the midpoint of the convergent triangle. So we didn't have a look at it, or we didn't trade it, but we had a look at it later on. Okay, we pointed out possible trading opportunities that you would have jumped into at that stage. But the key point that I'm getting at, markets got to that level, turned, and the market still got down to this level where there's been buying in that zone. There's been buying. So when you see these kind of patterns and you see these levels that the market is repeatedly trying to break through, do not ignore them, because they will help you to take trades, but they will also help you to preserve profits. So if you've taken a trade anywhere within there and decided to ignore this, the market will have pulled back against you and you're, hey, what happened to all my profits? There's hardly any way for me to have managed this. And the only point we need to mention is don't ignore this. The other side of it is if you decide that, okay, I'm going to stay out of the market and see what happens when we get down here and you see the market turning, you say, okay, the bulls are strong. So all I gotta wait is find ways to get in the market. Easiest way to get in the market is wait for a pullback and trade. If you don't get the pullback, gotta wait for these closes above the EMAs. And then decide if you're really happy to risk half the trading range. I'm not, I'd rather wait, because there we are halfway between the trading range. Yes, it did go up, but I don't really want to agonize to make one-to-one by trading from middle of the trading range. I want to wait to see if the market gets down here. And if it gets down there, then I can take a trade with a tighter stop and still go all the way up. But now, having seen that, question you're asking yourself is, okay, so what are we going to do with this particular market? Well, we go back here again. I'm not surprised with what's taking place. It's just this trading range price action. Okay, so you can go in and just be buy low, sell high, buy low, sell high trading range, or wait until you get to the extremes and see if you can execute your trade instead of taking a trade in the middle. Waiting for everything to. Okay, I want to put up the 5-minute charts that we are looking at and see if anything of interest happens at the top of this particular hour. Now let's put the UK 100 on as well and see. It's always interesting to be aware when the market is getting to the top of the hour, if you're trading the 5-minute chart, because hourly traders tend to get up and say, let's see how the candle is closing, and they want to jump in and do all sorts of interesting things. So sometimes you see some dramatic price action, which doesn't last long, but it's worthwhile to have a look at it. Okay, a couple minutes. I'll talk about why I'm always selecting either the S&P 500 or the NASDAQ 100, the correlation there. So there really is no problem at all if you have 10, 15, 20 charts open, as long as you're able to process all the information and make the right decisions. That's really the main thing. You don't want to get confused. If I was to take a trade out of each of these, even if I reduce my risk size, I'm bound to get confused, because I'm trying to think, okay, are we going long here? Where should my stop be? Should I be trading a stop? And then I flip through to the next chart, and by the time I work through it, you end up making a mistake. And you say, but why did I get stopped out there? Well, because you kind of just moved your stop. Your brain hasn't processed fast enough where it should be. So I find it ideal to try and find, up to 4 markets that I think will go my way. If they don't go my way, that particular session, that's fantastic. Tomorrow is still another opportunity to trade. Okay, so we got these 5-minute charts. We're just going to wait a few seconds to midday and see if anything happens, or midday South African time, but just top of the hour, wherever you are. See if there's any dramatic moves at the hour. It doesn't affect whether I'm in or out of the market. If I see a setup, I'm taking it, but it's always fascinating to see if anything comes in. Okay, based on a sell-off here. Nothing much on Hang Seng 50 at the moment. UK 100 inside candle there. We need you to wait a little bit. German 30. So the bears still, went into the hour, controlling the last candle, but we want the market to get to the extremes before we can look at anything else. So nothing for us to jump into at the moment. What do I have clutter in my... Okay, correlation. So we chose S&P 500 instead of NASDAQ 100. You don't want to be, if markets are closely correlated, you don't want to be taking trade here and there, because you might say, hang on, I only risk 1% a day, so I've broken that up into 4 pieces of 0.25% each, so my risk is pretty spread. So I put 0.25% here and I put 0.25% here. If the markets are correlated, you might as well put 0.5% on one of the markets. Okay, so when I see markets with this close correlation, I really don't confuse myself any further. We just take off one of the markets and we focus on here. So today, S&P 500 was it so far. Okay. The other correlation that I look at is German 30 and Euro stocks, 50 top 50 companies in the European zone, top 30 companies. German, strong correlation between those markets. So I try and pick which one I want to focus on. So today, because of this bear channel, breakout bear channel, and anticipating to see whether we get a break above the doji candle, failed breakout above the doji candle, coming, that would come off this descending trend line. That's the primary area of interest. So would want to wait and see if we get there. If by the end of the day we don't get that, we have an inside candle, still will remain on my watch list for tomorrow. But now I want to see if the market's going to try and break out above that 1 bar doji. And did I delete something? Looks like. And in an attempt to break above that, I'm expecting this bear channel to hold. So there'll be a test of it. Then I want to be in the market to look for shorts. Okay, going back into the trading range. That's really the area of interest for me. So I'll see how today ends. Whether it ends as a bull candle or bear candle doesn't matter, but that extreme is absolutely key for me. So I opted for that instead of the Euro stock. And really the only reason is that on the German 30, if you look at it, there is a clearer bear channel close to the top of the channel. So that's what I want to look at. But you could choose and say, actually, like the Euro stock 50, go in and look at it. Look at the highs and the lows, and look at any failed breakout above the 1 bar doji. So the one thing I'm always saying to myself, George, don't spend too much time trying to be clever choosing markets. Okay, because I think I'm so smart. I know how to pick the markets and waste more time there. I really got to get a sense of probability. Remember trader's equation, risk reward probability. That's what I'm looking for. If it turns out that, oh my goodness, I wish I had picked up this trade, it doesn't matter. I leave it because there's always so much opportunity that is there for us in the market. So Euro stocks was taken out. Aussie 200, we look at it end of the day. Okay, Nikkei 225, didn't like the big tails there. I'm gonna wait for it and look and see if we get up there, whether today or tomorrow. Okay, so by the time we're gonna keep watching it and see what happens. Hopefully we get something of interest taking place. But if we don't get that coming through by the time the US session comes, then, or by the time we get to the US session, then we have to wait for the open of the US markets, because there's always big volumes coming in that might impact, reverse things for us. So let's just wait for that. I want to show you something quickly before. So I have this encyclopedia of charts that I create for myself. So every day I go into the market, I have a look at it and decide what do I need to analyze in case it appears like in the future. So don't worry about this notional stop hedge trade thing, but look at this convergent triangle. Market broke out beneath the convergent triangle. Later on, we speak of the apex, came back to test the apex. So you could have looked to take a trade here, or on that test, take a trade here. On the other hand, trading range bottom, this is an entry for you to have taken, but you'd have had to wait a pretty long time. Now, the other thing that same market, okay, so it's still the Hang Seng 50. I mean, if you look at it, this is yesterday, you can say, man, this is a cloud. How do you even see where the expanding triangle is? Whenever you see any trading range and you're not clear about it, just go and put line charts. And the line charts, hold on a second. Okay. So Hang Seng 50, we're talking about that expanding triangle, and you can't say, I mean, how do I see that? Go and click on your line charts. And clearly, well, not clearly, whenever things are pretty confusing in terms of the candles themselves, if you look at the closes, you get a sense, a clearer sense, oh, hang on, we actually are in a convergent triangle, so I can expect there to be a breakout. Okay, and when you see a convergent triangle, you can anticipate a breakout, and then you can trade the breakout. And later on, we got the test taking place right there. Another convergent triangle, okay, gap down, bull candle, then the market created a convergent triangle. So, you know, price action is coming together, and there's an attempt to break out. Before you see that, you can take that trade, but you anticipate that the apex will be tested. The market came back, wasn't a perfect test, but it came back to try and test the apex as well as the open of the day. So you could have added on to your trade right there or later on there. Another convergent triangle. Okay. Opportunity for you to jump into a trade there. Then you have an expanding triangle. So converging, the market is coming together. Expanding, the market is moving away, but creating some form of a triangle. And that's a bottom that you expect to hold. So bulls come into the market. Now, so I create this as I go along based on what's happening in the market, and I encourage you to do that. So whenever I'm trading, I just flip through to say, okay, what's taking place here? So here's a classic one, S&P 500. Do you see this shape that we have here? What letter does that shape represent? So that shape is a V shape. So if I'm wondering, man, how do I trade? How have I traded this before? And what's the probability of the market going my way? I just go on to my encyclopedia of charts, chart patterns that looks like a V. Then I start to see all of these shapes that I've already seen, hundreds of them, in terms of how V setups work. I'm able to take a trade comfortably, because I've seen it happen before. Okay, these are all my strategies. Okay, V, test of apex. See that V, then I can comfortably wait and see if the market will reward me. Because if I've seen these hundreds of times, I know the higher probability. So if we kind of in here, I'm taking that trade with a measured move, or I can wait, and there's another opportunity for me to jump into the market. So the point of this is price action is only going to work for each one of us, or we're really going to get to grips with price action if we start to do all of these analysis. So the last one that we had to look at, that V shape. So I'm not in any way panicked or rushed or concerned or worried. I'm going to wait, because if the bears are going to sell, just as we saw there, the bulls are going to try to accelerate up. And if the bulls accelerate up, there's going to be a failure somewhere within there to give me a very clean and clear reversal candle. Okay, of sorts. Then I'm going to take that and trade it all the way down. Why would I do that? Because I've seen this pattern enough times to know that there's a higher probability that will happen. So higher probability means 60–70% of the times that is what will happen. So by the end of the day, I'll have a look and say, okay, it's happened again. So I start to build up keep on adding on to my charts. Okay, one more quick look. 50. Okay, we don't know whether the bulls will create a high and low here, so worthwhile to wait for this. So we're going to see, so that's we're just going to figure out. If we get a market bouncing off here and doing a reversal for us, take the trade, stop down here. What else? Okay. UK 100, we've got to wait. We're in the middle here. We just tested that breakout point, and that breakout point, need a little bit more information, which we'll get either in this market, in this session, or when the US session opens. So in about 3 hours, 15 minutes, Wednesdays at the market, the last hour and a quarter. 4-hour session, easier for everyone to handle than 8 hours, been absolutely fantastic. Let's see if we can add on to our profits for the day and get more than 1%. All right, guys, those who are coming back, we'll see you later. If you're just in for live trading profits, we will see you next week. Thank you, guys. Take care. Marlon, thank you for hosting us, boss. Cheers, guys. Bye-bye.